I was buying property when nobody wanted to be over here. What other people were scared of, I saw opportunity. Money talks, wealth whispers. So I could buy all this stuff and nobody knows it's mine. When you poor, you're looking at the ceiling like, God, all I need is some money. When you get money, you're looking at the ceiling like, God, please don't let me lose this money. Everything's a process, but we in such a fast-paced time right now. It's like everybody's chasing feelings and moments. Nobody's building anything anymore.
So watch this. This right here,
right,
is that and that. Talk about perspective.
Right.
You see what I'm
saying?
So one
more time, you said this
right here cost the same amount as me building that and that. Difference is, watch this. Right. My shit gonna be worth 1.2 million when it's done.
Ah, so he just flexed on me.
Perspective.
Yeah, he just flexed on me. Yeah, he just
I think I might get one. I think I might get one after that. Nah, hell no.
I wasn't always loaded. I had to stay down when they got what I wanted. Now when they see me, them bitches be on me. Now when I pull up, them niggas hate on me. I got more money than niggas big homies. Had the grind for the shit, did it all by my loan.
What's up, y'all? It's Cash here. I appreciate you for tuning in to another video. Today, we're going to be diving into real estate, one of the most powerful ways to create financial freedom. But there's a lot to know, like the down payment, getting inspections, and even using other people's money, OPM, to own more land and to have availability to buy and invest more. So I pulled together some of the top clips that I found helpful in my journey, like from EYL, MG the Mortgage Guy, Noelle Randall, and Karlton Dennis. These people are going to be helpful in your journey to real estate, their channels as well. I'll be leaving the links to all of the videos down in the description below. Alright, let's get into it.
Who's a renter, you should definitely be excited about all the possibilities and things that's going to happen with home ownership over the next couple years. I know everybody's talking about it's so expensive with interest rates, which we're going to talk about later, but you also have to understand it's not going to get cheaper. I hate to break it to you. I'm not going to give you no fear-mongering things talking about the market is going to crash. It's not going to happen, right? It's predicted over the next 5 years, whoever buys a home in 2024 in the next 5 years they will gain at least $100,000 worth of equity in their home in the next 5 years. So it's not going to get cheaper, ladies and gentlemen. And as these mortgage rates continue to drop, home prices are only going to rise because there's going to be more people in the marketplace. All right. So be excited about home ownership. Go out here and execute at a very high level. Now, before you go out and execute, financial planning is very key. Most people always ask me, where do you start first? Right. And you have to start, I think, number one, with that mindset. You got to be disciplined to buy real estate, right? Because it's a big investment. Whether you're buying real estate, investing properties, or you buying your first home, it comes with a lot. So you got to be mature enough to handle the responsibility of paying your bills on time and maintaining the property. But you also have to financial plan properly, right? Make sure you got the right budget. Make sure you're not overextending yourself. Make sure you have enough saved for your down payment, your closing costs, and most importantly, for your reserves. All right. Everybody type reserves in chat, right? Reserves are extremely important. Too many people are house rich and cash poor. So you don't want to be house rich and cash poor because life will life, ladies and gentlemen, and anything can come up. So you want to have enough money to cover at least 3 to 6 months of mortgage payments. God forbid anything happens to you. All right. Partnering with the right real estate agent in the beginning and also the right lender is very important, right? You need to work with people that understand the market that you're looking to buy in, right? And most people don't look at, when you're buying your first home, they don't look at it like a business, guys. They look at it as they're just like emotional. They're so happy to buy a home, but you also have to understand real estate is a business. If you can get tax deductions on it, you need to treat it like a business. So hiring the right team, not just from your real estate agent, but hiring the right loan officer / lender, hiring the right contractors, hiring the right attorney. Make sure you have a team in place, and all these things should be in place before you go out here and sign a contract. Because what I see, one of the biggest mistakes that people make, they go out here trying to buy homes and buy real estate, and they don't have nothing in place, and they're only they're only dependent on the referrals from the realtor or the loan officer. And they trusting that these people are going to treat them right and treat them the right way or give them the right service. And not necessarily that's always true. Not everybody's always going to have your best interests in mind. So you have to be the CEO. You have to know as much as each of these professionals. You don't need to know everything they need to know, but you need to know enough to have intelligent conversations so you can make sure that you're hiring the right people.
All right, guys, step number 1 is preparing your down payment funds. In most cases, if you want to buy a rental property, you're going to need down payment funds. And for the down payments, most lenders are going to require that for an investment property, you put 15 to 20% of your own money down in order to get approved for a loan for a rental property. Sounds like a lot of money. This means that you can expect to put anywhere between $15,000 down upwards to $100,000 down or even more. So yes, there is a financial barrier to enter real estate investing. And for this reason, real estate investing tends to be a better option for people who have a decent amount of money already saved. If you're not in this category yet, you might want to consider building up your savings first before getting into rental real estate, because things can kind of go wrong when you're jumping into a business without a lot of capital. But if you're really ready to get started, if you don't have a whole lot of money for a down payment, there's still a few other ways that you can consider. For example, it's possible to get an FHA loan for a rental property for only 3.5% down. There is one major caveat here. You will have to live in the property for at least 1 year. So a lot of aspiring real estate investors who are trying to get started but are short on cash will go the FHA route, buy a multifamily property, live in one unit and rent out the others. Then they move out after a year and rent out the entire unit. That way they can go ahead and start earning cash flow if they were strapped for cash to begin with. Keep in mind though that if you guys go this route, you'll also have to pay mortgage insurance, which can add on to your total costs. There are a few other creative financing options available if you want to get started without having to make a 15 or a 20% down payment. But since this video is for beginners, I'm not going to cover those methods in this video. For now, just be aware that you can either make a 15 to 20% down payment, or you can make a 3.5% down payment with an FHA loan if you don't mind living in the unit for at least a year. Okay.
So when we are talking about rental properties and getting your first rental property with no money down, I did it and you can do it too. You have to leverage other people's money. I know you guys have heard this term before. If you haven't, it's a big acronym in the real estate investing world. It is OPM, other people's money. Now, does that mean like your mom and dad's money, or you got to come from a wealthy family, things like that? No, that's not what I mean at all. Banks have money to lend. Hard money lenders have money to lend. There's private money. The person that you are buying the home for, in many cases, can lend you money or give you equity. So many different things. But you need to understand the process, because you don't want to get over leveraged, okay? You don't want to mortgage all of the value and the equity away on the property. You want to have some equity so that when you sell the property, like I said, you do get those lump sums of cash. So let's kind of talk about other people's money. So when we're talking about getting a rental property, in most cases, I'm talking about using either a hard money loan, and that's where you find a property that needs some repairs. It may need to be fixed up a little bit, and you put in some effort and you fix that property up, or you hire a crew to fix it up, and then you refinance out of that mortgage once the house is fixed up, and you put a tenant in it, okay? This is a very popular concept in real estate investing called BRRRR, okay? And that stands for buy, rehab, rent, refinance, repeat. So essentially what you do, you buy the property, it needs repairs, you rehab it, you fix it up, you rent it, put a tenant in it, then you refinance that mortgage, okay? Because now that you have a tenant in there and they're paying the mortgage, that is income, and the lenders, the banks, they will give you credit for the rent that that person is paying, okay? That future revenue that you're going to get. And so it makes it easier to get qualified for a loan. Again, I have a whole video on it. I won't bore you on it. But then the last R, of course, is repeat. That is how we build our portfolios. We get tons and tons of properties doing it this way.
So these are the main real estate investing strategies. You have flipping, wholesaling, land, buy and hold, short-term rental, syndication, multifamily investing, lending, commercial real estate, subject to, and BRRRR. And let's start with flipping. I'm gonna put flipping as somewhere in the middle of the pack. Flipping is where you buy a property that is heavily distressed, you put in some work into renovating it, and you sell it at a higher price. Flipping, yeah, you can make a lot of money, you can also lose a lot of money. That's why I put in a solid B tier. So wholesaling as a real estate investing strategy, I would put it actually as an A tier, simply because it is relatively easy for someone who's brand new to the business to get in and start making a good amount of money.
I'm rich.
Now, the thing with wholesaling is it is incredibly sales heavy. Land is where you just buy land and then you sell it to a developer. Now, the big pro to buying land is that no one really wants land, so you're usually able to get it for a good deal. Most of the people that do land acquisitions as a business are finding people who have inherited land and they're sick of just paying property taxes for a big plot in the middle of nowhere. I'm not a fan of this one, but again, of course, people are making tons of money through this one. All right, the next one is buy and hold. So this one is the typical buy rental property, rent it out, make passive income, and over time you get all these tax benefits just from holding it. And I would put this on the S tier. I think buy and hold real estate is the best wealth generator of all time. All right, next is short-term rental. So short-term rental in this regard is just going to be putting your properties up on somewhere like Airbnb or VRBO and then renting it out on a nightly basis. All right, the next one is syndication. So syndication differs from multifamily because this is just you putting in your money so that an operator can then buy a multifamily property. If someone who has a lot of net worth and they don't have the time to do any of these other strategies, then sure, yeah, syndication could work for you. All right, the next one is multifamily. So this is actually buying the apartment buildings yourself. So this is either where you're going to be doing syndication to get money to buy your own multifamily properties, or you guys just have enough money to buy it yourself alone. Like, it's very complicated. And if you're in a situation like this where you maybe bought in 2019 where rates were relatively low, and then here in 2024 where rates have spiked and almost doubled in that time, you're going to be in big trouble because now your mortgage payments are very high. And if you thought of selling at this time, well, anyone else who wants to buy your property also has to get a loan at these higher rates too. So they probably won't buy it for very much. So that's why commercial real estate and multifamily, like, I don't know, I put it lower than buy and hold because financing is such a pain at the scale. But yes, overall, I do like it a lot, but I put it above wholesaling because you get a lot of tax benefits from owning multifamily properties. So the next one is lending. So lending means you're a private money lender. You want to give money to like a flipper or a buy and hold investor, and then you get a note. So a note is like a mortgage. Okay, the next one is commercial real estate. So commercial real estate, I always put it as a D category simply because of COVID. So commercial real estate, that's like, bigger warehouses or office buildings, strip malls, stuff like that. Now, the reason why it's a D category is, first of all, like, let's be real, most people who can afford this aren't watching this channel. Second of all, commercial real estate has the same problem as multifamily real estate, where you have a high net worth, they need to blow $100 million somewhere, so you might as well buy some strip malls. But yeah, after COVID, a lot of like other activity places are closing, right? You can see it. Malls are closing down. Strip malls aren't doing as well. You maybe have like one restaurant in the middle of a giant plaza. Everything else is shutting down. So yeah, commercial real estate, I would probably stay away from this at the moment. So let's talk about subject to. So subject to is where you can go to a seller and take on their current mortgage. So let's say that they are selling a property for $500,000, but they already have a mortgage on it for $200,000, and the rate is at 3% because they got their loan a long time ago. You can go in there and potentially take over the current loan at 3% and then buy the rest out. Now, like, it's great when it works, but it's not reliable. That's why I put it as a C category. Like, you really need to dig and find someone who's willing to sell you the property for below market value and then be able to take on their loan subject to, so that the money that you actually put out is very, very low relative to the mortgage. Okay, finally, the last one is the BRRRR method. So BRRRR stands for buy, renovate, rent, refinance, and repeat. And this is basically the same as buy and hold, except you're doing the strategy of taking out your equity again and buying another property. This is an amazing strategy. I do put on the S tier, but I do put it behind buy and hold just because right now the interest rates are very, very high. So the chance of you actually pulling this off successfully is not as high as it used to be.
Let's protect each other in terms of inspection, because you brought this up and this is important. If I'm looking at a property, some of the things you can see with your eye, right? Like, I can see like the roof may need to be repaired, but then there's some things that you're not going to see. So what are the questions that we should be asking while inspection is happening? I'll give you a prime example. I'm in a home right now. My plumbing, right, to the city line had a belly in it, right? Mm-hmm. That repair cost me over $20,000, right? That's not something I can see with the naked eye. So what are you telling clients as you're going into inspection, the questions that you should be asking? Obviously, age and condition is important, but what are some other things?
There are different levels to home inspections, right? So let's just say you're buying a new construction property, you can just literally get the general inspection of the property. But if you are buying a property that is a little older, you need to get a home inspector, you need to hire an engineer, and you need to hire a plumber that will actually inspect the pipes that actually go from your house to the road. When you did do an inspection from your house to the road, because that's what you're responsible for, then right where, I know exactly what you're talking about, and we're right where the city is responsible, before you're responsible. If it's on your side, you have to pay for the repair. If it's on their side, they have to pay for it. But because you probably just did the general home inspection, it was missed, because you need to actually do, though it costs a lot of money to buy a house. So especially if you're getting an older home. So I'll have a whole list. You can get an individual roof inspector, a plumbing inspector, a general home inspector, a HVAC inspector. So when you're getting all these inspections, it can cost you up to $1,500, but it protects your best interest in the long run. Whatever you don't do up front, you pay for in the end, as you're seeing for yourself. Had you paid for that inspection for the plumbing, where they use one of those lights to go down the plumbing hole, you would have saw this and you could have negotiated this with the seller prior to closing.